We are halfway through 2021. Let's give the Denver real estate market a mid-year performance review. Hey everybody, I am Alyson Wahl with Live South Denver, your real estate strategist and realtor for the South Denver area. If the market were measuring itself, I think it would give itself rave reviews. However, we all know there's a little room for improvement. Let's jump right in and look at the data. There were 6,151 closings in June, up 6% from last June. Last June was our first full month out of lockdown after quarantine. That 6,100 and change closings is a 14% increase from 2 years ago as well. We saw the biggest change in the attached home market. Condos and townhomes had an increase of 14% in closings over last year and an increase of 23% from 2 years ago. Now, single-family home closings only rose about 3% from last year. However, compared to 2 years ago, they rose a sizable 10%. Buyers put 6,300 homes under contract in June. This is right on par with what they did in May. That number is down 6% from last year, but up 14% from 2 years ago. We had a wonderful 7,200 new listings in June, 6.5% more than a year ago and 4% more than 2 years ago. This sounds like music to our ears. It sounds like we're heading in the right direction, especially if we compare it to last month's data when we were down 24% in new listings from 2 years ago. But even with that slight increase in inventory and cresting the 7,000 mark, we had a decrease in days of inventory, meaning how long would it take to sell every home on the market if we kept selling at the same pace? In May, we had 15 days of inventory. In June, we ended with 13 days of inventory. And inventory is down between 52 and 59%, depending on if you're comparing it from last year or 2 years ago. The average days on market for June was just 9 days, down 2 days from May, and down from a whopping 24 days last year. I mean, even 24 days as an average isn't bad, but we have really seen a shift in how quickly houses are selling over this last year for sure. And those median days on market, it's still 4 days. It's been 4 days for 4 months straight. The average list price to sold price ratio did go up a smidge. It went from 105.1 to 105.2. Now, the single family home segment stayed completely steady at 105.8, and that's good news. And that is because that is reflective of how the market has softened in terms of overbidding. We are definitely not seeing the same kinds of aggressive bids that we were 3 or so months ago. So instead of seeing every house going for 60, 70, 100,000 over list price, it's much more common now that we're seeing somewhere between 15 and 40-ish thousand over list price. There's always outliers, but that's a huge difference, right? We're seeing 40,000 on the high end versus 100,000 on the high end on average. So that's why the single family home one stayed pretty steady. But what moved the needle was the condo and townhome segment. They're up at 104% average list price to sales price ratio. So why are they seeing so much activity? Well, we talked about it at the front of this video. They've seen a lot more activity in closings and sales, not so much an increase in inventory availability. And so that means when you have not enough inventory and a high demand, of course, the bidding wars get crazy. And part of that is also because the condos and townhomes fall into a much more reasonable price point than homes do. So the average price for all homes in June went to $638,000, up $23,000 from last month. But over the last 2 years, that's a change of 27 to 29%. If we break that down into the condo and townhome segment, we've seen a 20% increase over that same time. And then when we look at the single family home segment, this is why I think we're seeing a lot more activity in condos and townhomes. We see a 34% increase on average over the last 2 years for prices. In fact, the average price for a single family home is now significantly over the $700,000 mark, and the median price is over the $600,000 mark. And Both of those increased by more than 6 figures over the last 8 to 9 months. Year to date, we've had about the same number of new listings hit the market as we did last year during that same time frame, but it is about 8.5% fewer than 2 years ago. In this same 6-month window this year, we've sold the most homes we've sold in at least the last 5 years. So here we are again with pretty low inventory and record-breaking sales, and that tells us why we have these strong price increases. All right, so what is the hopeful news? Is there a silver lining? Yes, there is. I've got a little bit for you. I think by the next market update or two, we're going to see that average list price to sales price ratio number that we talk about dropping out of the 105s into the 104s, and I really think on a downward trend from there. It'll be slow, but I don't think we're going to be staying up in the 103s, 4s, and 5s over the next 12 months. Also, I think those year-over-year price increases are going to soften as well. We've been seeing 20% each month for the last several months, where we're besting last year and even 2 years ago by 20% or more. I think that's going to soften up a bit, and we're going to be looking at 15, 18% heading into the back half of this year. Again, neither of these numbers are saying to you as a buyer, hey, prices are dropping in the market. We're not looking at getting bargain deals, but what we are seeing is that you're not necessarily having to bid as much to win an offer on a house when you're competing against other people. And there are still scenarios where you're getting a house at list price. I can count quite a few on my hand for just this last month where my buyers didn't pay anything or much over list to land the deal. So what are some of the challenges I see ahead? Well, there's more than we could have time to discuss right now, but the big one is inventory. We need more inventory to level things out, and I don't think we're going to get a substantial amount of that anytime soon. And the other part of it is seasonality. So we're in the back half of the year, and that's when sellers start to taper off with putting new listings on the market. But thanks to technology and all that we uncovered during this last year, year and a half, we know that it's not that hard to actually buy a great house long distance, not have buyer's remorse and find out there were things you didn't like about it, because between the pictures, the virtual tours, Google Maps, and a great agent, especially one that'll get in there and do that sniff test for you, you really do have a very good feel for the home, and you can buy it from a distance. You don't have to worry about weather, how busy your day is at work, meetings, all of those pieces of the puzzle. But while the buyer demand can now be more evened out thanks to those things, seller demand, if you will, is still fluctuating with seasonal cycles, which gives us a push and a pull on the market that might even get more rapid than we've seen in history. With those changes, that means we'll go through cycles of aggressive bidding wars and softer bidding wars, aggressive bidding wars and softer bidding wars, and all that will just be part of the landscape of the market until we get to where we have plenty of inventory. Sellers, we still need you. And the good news is appraisers use 6 months of history to comp out your property when they're determining if your property is the value of, the offer you received. These last 6 months have been gangbusters. Now is a great time to list your home and see that there is enough data in the marketplace to support a really strong list price as well as some strong offers. So go for it. You're still in a great position. Buyers, the good news for you is the market has softened. We aren't in the crazy peak that we were back in March and April. So each side, the buyer side and the seller side, both have some great news right now. Buyers, I do want you to keep your eyes on interest rates. They're fantastic right now still. As they start to inch up, which is fairly expected, know that it does impact your buying power. For every 1% increase in the interest rate, it decreases your buying power by 10%. Thank you all for joining me for Denver's mid-year real estate market performance review. If you have thoughts, comments, questions about the market, send them along, post them below in the comments. I would love to hear. If you want to chat about moving to Denver, have questions about the area, I would also really love to connect with you and see how I can serve. You can call me, text me, email me, whatever works best for you. Hey, I will see y'all next week.